All right, folks, welcome back. So we're going to be doing a market review here. So we have the dollar index trading back down into a range. I mentioned that we would likely trade down into this area here. We got down into it. Had a little bit of a consolidation on Thursday, Wednesday, and Tuesday. Was the only nice big down day that made sense going into the level just ahead of this imbalance here. So we're going to drop down to a lower time frame. All right, so you can see we had Friday, Thursday, Wednesday, Tuesday, Monday's trading, keyed off of our old 107.61 level. Fair value gap there, optimal trade entry, sells off. Find some support at the old 106.42 level. If you're unaware what those levels are, put the line on your chart, go back into your old data, and you'll see what that is. Relative equal lows in here. We swept down after taking buy side out here. So all the sell side has been attacked. We've rebalanced this imbalance in here. We also returned back to the bearish order block. So we'll see if it wants to get a little bit further down into the 106s. Maybe even touch the 105s, 105.80, 105.85. That would spell a short-term relief rally on Eurodollar and cable. All right, drawing in real tight on the daily chart for Eurodollar. The fair value gap in here I drew your attention to. We did in fact get up into it. Have yet to go back above it and find some support at it, so that it's not happened. We've just had a consolidation week pretty much for the entire week of trading. Nothing here I like in terms of the daily chart. If this would have came down into this small little gap, that would have been better. But it looks like we could still pop up and return back to that 1.0340 level. And that is also in line with the likelihood that the dollar could slip a little bit further on its daily chart into its imbalance. So that would give us a little bit of a lift to trade up above this short-term high. Maybe revisit that 1.0340 level. If we break lower, I'm monitoring this gap. Below that gap, then we're going to challenge that low. But for now, I'm still thinking, as I gave you on Monday, the likelihood that we could trade up into here. But just watch this gap, because that gap might be influential going in. But it's not that much of a range between where we're at here and that level. So it could do it in one day. But I'm still thinking it's likely to give us a little bit of push higher. Let's go into the hourly chart for it. All right, hourly fiber or Euro USD. You see we had sell side here, attacked after buy side has been taken. So it's been range bound. Remember what I showed you on the hourly chart for $1? It's very similar to what we're seeing here. So it's consolidating. It's setting up the likelihood of a large range event next week. So consolidation now, large range is next week. Okay, so that's what we're expecting. Sell side's taken, we ran above, imbalance is rebalanced, and we'll see if it wants to get above. Maybe trade into the 1.03s. Let's go to cable. All right, British pound versus US dollar or cable daily chart. Almost completely rebalanced all of this here. I'll get this out of the way for you. We'll extend this out in time. That's the range that we try to draw back up into. We ran buy side, so high, relative equal highs. We rated that and came back into the range. That to me is sloppy. So this one here is a little bit better versus the euro dollar. We did come back down into that imbalance where euro didn't do that. So in my mind, I'm thinking, it should have easily closed in that gap, but it didn't do it. So I don't like this pair because it's being very fickle. And I don't like trading markets that are doing these types of things. It has to be one-sided. To define high probability is to look at it one-sided. So it has to be easy to see one side of the marketplace potentially deliver going higher, and next to impossible to frame it as a short. That is my definition of high probability. It may not meet the criteria that makes high probability for you because you might use indicators or some other method, But for me, using just time and price, I'm looking for elements that supports the idea that one-sidedness is high probability. I might be wrong as the analyst, and it has happened. I'm not infallible, but largely my results are hinged on framing the market in that capacity. I'm looking for one-sidedness. That means I'm looking for the obvious low-hanging fruit direction that's going to go to a specific level. There's nothing ambiguous about it. There's nothing wishy-washy about the analysis, and I'm not leaning on anything that would give two sides of the same coin. I'm looking for one-sidedness. Okay, let's look at the hourly chart. Again, this week has been consolidated again, much like we saw on the dollar index. So we'll expect some volatility next week because we've been range bound for this entire week. Let's look at the gold market. All right, here's gold. I mentioned that we would run for these lows and then this low. We got both of them. I mentioned this was likely to be the next draw on liquidity. If you look at the low on that candle, comes in at 1677.9, basically 1678. And the low of trading on Thursday came in at 1698.4. So it was off a half a point, or $50. So that's pretty close, but it didn't quite get below it. Do I think that it's going to run that low out? I don't know. Like I said, this is a market I don't like to trade a lot because it's event driven. And if we have a little bit more weakness on the dollar, which is kind of like I'm expecting that going into next week, that means that we could potentially see gold pop up and go into this area here and attack the buy side as well. So revisit these relative equal lows. Not that I'm playing support and resistance, but I'm really eyeballing that little gap right there. Okay. And I'm not going to go in the lower time frames. Well, yeah, I will. Indecisive ICT. All right, so here is the business on this week. We had the market open up here, consolidate, drop down after a fair value gap there, rolls down and just falls short of the old low. See that? So that's where that old low is on the daily chart, and it just fell short of it there and then vaulted higher to attack the buy side here. And what do we have here? Relative equal highs. If it's going to go there, it's probably going to sweep that as well. So 1750, 1755-ish. That might be doable. I like how we came back into this old high with the fair value gap, traded into it there. So if we get any kind of movement on the upside, weakness on the dollar, 1750, 1755 is probably likely to be seen this week coming up. So you see me fail. I didn't get the objective down there, but we got two of them. So, not infallible. All right, so let's take a look at ES. All right, here is the daily chart for E-mini S&P September contract for 2022. And as I mentioned earlier in the week, I mentioned that we would see the buy side here, here, and here because we already worked the sell side there. So buy side resides here, here, and here, as I mentioned in the previous discussion about E-mini S&P. And the market did, in fact, drive up and get that liquidity. And ultimately, my private group knew about this as well. We would reach up into this, rebounds this. That low comes in at 4,016 even. That's this price level right here, folks. Just look at that right there. And it ran up to that today and went 1/4 point above it. Look at the high on Friday, 4,016 and a quarter. Pretty close. So obviously it's just been one direction driving higher for the buy side and rebalancing all of this here. Next week, do we get a pop-up continuation into this area here? That's what I'm watching. So we'll see if we get that. Just be mindful of this candle here as well. This is the bearish order block. Not this one, not this one, this one. Okay, this one here. Why? Why this one? It's the highest up close candle, and it's got a nice body to it. So even though it has an up close candle here and here, this is the one I would use because this one's higher than that one in the closing basis, and this one's inside that range. So this is not the bearish order block. Okay, so let's drop down to a lower time frame. All right, here's the hourly chart on E-mini S&P, and you can see we had our nice run on Tuesday. ran the objectives that was outlined in advance. So we had this run up, found some support at the level that we were looking for as well as for buy side. It ran up to the next level, which is 39.67 1/4. Pulled back down in, rallied back up, swept the 4,000 level and went right to the 4,016 1/4 level. That candle right there. You can see the high right there. All right, and you're probably wondering what these levels are, so let me scrunch it up for you. This imbalance here, that's the level I'm showing you. And here's that daily imbalance being completed with that orange level. So I have a little bit of an imbalance with some relative equal highs here. Be mindful of that going into next week. We could be just going one more time up into it. Now what changes that? What goes in play for sell side? Well, we do have a fair value gap here. Okay, we have a shift in market structure on the hourly chart. And should it trade back up to here and fail on the hourly, we can use smaller time frame like 5 1-minute charts, something like that, to look for a fractal form of this very pattern that I taught you on this YouTube channel. So if it goes up here, sells off on the hourly, you can go immediately into the 1 or 5 minute chart or something to that effect and look for a similar pattern where there's a shift in market structure after buy side's been taken, and then use that to frame a potential run into this low, and this low. Okay, because you had 1, 2, 3, 4 times, and we closed that daily imbalance in. So if it respects this fair value gap, which I don't know yet. Now you're probably saying, okay, ICT, we just watched you murder the market this week. Yeah, but on Sundays, I don't know where they're going to open it. And my private group knows this as well. I say it all the time. My Friday analysis going into the weekend is always an uncertainty because where they're going to open it, I don't know. Anything can happen, folks. You know, anything can happen over the weekend. Something completely unexpected. I'm saying that with tongue in cheek. You know, an event across the pond, around the other side of the world, or right here in good old USA. Something could happen which creates tidal waves in the marketplace. And they will utilize that sentiment and have extreme gap openings and completely lay waste to mine or anyone else's analysis over the weekend. So we have to watch and see how they open it up on Sunday. That's always the understanding, exactly how my students expect it. And I teach it that way because that's the reality of things. I don't have a crystal ball that tells me where they're going to open the market on Sunday. I just have some things that help me read where they're going to take the market throughout the week, where the likely high and low is for the week, how the daily high and low is likely to form, what prices, where it's going, daily bias, the whole business. Those things are only useful to me after Sunday's opening. And then I watch Sunday's trading into Monday. Usually by London close on Monday, I have a pretty good feel for what the weekly's going to do. But not all the time, but most of the time, yeah. All right, so let's take a look at the 15-minute time frame. All right, have a little bit of business on here, and you'll see it better on the 5-minute chart because these are actually bleeding into the 15-minute time frame, which they shouldn't be showing. But we ran above that 4,007.75 level, which is the imbalance level. Okay, again, if you put these levels on your chart and cycle through the hourly chart, you'll see exactly where they're anchored to. Okay, but we went above it. We have a shift in market structure, short-term low there. We come back up to an imbalance, which you'll see obviously on a lower time frame, but it's trading into it here. That's a sell. This is another one you'll see it trades into and breaks lower. It hits the lower level imbalance and then trade lower, breaks into the afternoon session, and then consolidates off the low into the close of the day. Okay, here's the 5-minute chart for today. All right, so we had market run up, just go 1/4 point above the daily imbalance, closing it in, runs up, trades into, again, an imbalance. You'll see on a lower time frame, I'm just showing you where it's working from 15-minute, 5-minute, then we'll drop down 4, 3, 2, 1. You have an imbalance here, trades up into that, sells off, consolidates, 39.67 and a quarter level, worked that as well, and broke down, reaching for a deeper discount. 4-minute chart. Okay, you'll see it when we get in the lower time frame. Imbalance works to those levels again. 3-minute chart. You can't see it yet, but it's trading into it here. Imbalance there, sells off the same levels. 2-minute chart. I know it's redundant. Okay, almost have it. You have one here on the 2-minute chart where it trades up into it, but it's the 1-minute chart. You're going to actually see it. And finally, our 1-minute chart. And I'll explain a little bit more detail. So here's the fair value gap. What's significant about that? We're trading above 4,000, 7 3/4. And we close in the daily imbalance. I'm off by a 1/4 point, okay? I'm not perfect. But it goes there, then does what? It breaks down, shift in market structure here, and then we have double confirmation where another low is taken out there as well. So if we take this high to that low, let's run our fib on it. What's so special about a fib? He trades with fibs. No, I'm using it for the purpose of measuring my range. So here's equilibrium. If I want to be short, it has to be a PD array, in this case a fair value gap, above equilibrium. There it is. So we have here, here, it trades up into it here. What time is that? 10:54. It trades into it. All right, so it runs up into that. We have a small little fair value gap there. Trades into it as well. Breaks lower, trades down into the 39.67 and a quarter level, the old imbalance low, and then sweeps the sell side below here. That's a really nice area to take profits. Going into the lunch, relative equal lows again, breaks lower. Look at this high to low right here, high to low, fair value gap, trades into it here, then rolls over. So you're watching, you're not trading it, you're watching it in lunch. And you go into the 1:30 hour or interval, 1:30 here. So you start watching to see what we're going to get for the remainder of the PM session. Trades below the lows here. Now we're getting long in the tooth for the week. The daily is completely rebalanced. We're on Friday. We broke down a lot. And now we started range-bound trading. That consolidation takes us into a retracement where they attack the relative equal highs and dig into this range here. And then you have just a consolidation into the close. All right, here's a Nasdaq daily chart. And I haven't been really interested in this market. Been focusing primarily on the E-mini S&P, but we had a fair value gap in here. Buy sides then cleared, and they dug into that, completely rebalancing that. So this one here looks a little bit more likely to trade back into this area here. So a small little gap there. I'm looking at that potentially, at the beginning of the week, going into Monday. That could be revisited on and or Tuesday. If it fails to get down there, I will be aiming for the buy side resting above here. On the hourly, buy side here. They run it. You'll see the setup when we break the lower time frames down. But what's this? Here and here. Relative equal lows. What's here? Buy side taken. Attack sell side. Bam. Okay. So we're going to change this level to blue. So there'll be only 2 levels on the chart. All right, and I just want to make sure these show on the 15. All right, and then obviously this is the buy side, and this is the sell side where it reached for, dropping in the 15-minute time frame. Okay, you see how we ran up, swept it. You'll see the sell off here with the model trade down into the sell side here. So one of the quick, easy ways you want to be doing your daily recaps and screenshots is like the hourly and 15-minute time frame, what liquidity pools they run for, and how they work with them. We have our imbalance here. They're not supply and demand zones, folks. Just a reminder. But I like to use the rectangles on the 15-minute time frame and draw little trend lines on anything less than a 15-minute time frame. But in this case, it's a 5-minute chart, so we're going to use that and work with that in the lower time frame 1-minute chart. But that's the drop down in here, and we're going to fine tune this level going down to the 4-minute chart. Okay, so we have our imbalance there. It's a little low. Notice that also. Why did you trade the SPOOs and not NAS? Look at the market here. The fair value gap is more obvious in a premium in the S&P than that of the Nasdaq. It doesn't mean Nasdaq can't trade, because it's obviously trading into a breaker. Okay, so you have the down close candle here. So this is what you'd be framing with my concept of breaker. It trades below that low here. Inside this range, at any time in here is a good time to be short based on time. But what price are you going to look for? What price would you utilize? We don't see anything in here yet, unless you want to run the buy side above that high. It does that there. But let's go through into the 2-minute chart. Now we have a fair value gap here. That's a little rich. In other words, it could get up here, but what's the earliest one after it trades below this low? Small little one in there, and nothing else that is noteworthy. A small little one there. That's nice. But you have to frame the likelihood of it trading up into that one. I didn't like that. So compare and contrast what I'm showing here in Nasdaq versus the S&P. The better trade was in S&P. And then here is the 1-minute chart. Really sloppy. You have a gap here, you have a gap here, and you have one in here that's too low. So it doesn't really get up into a premium, does it? Does it? No. So which one would you trade? S&P or the Nasdaq? S&P clearly. Okay? Makes that very easy, doesn't it? All right, so yeah, that's the business on that one. I'm trying to think if there's another market I wanted to cover with you. And for the life of me, I can't think of any off the top of my head. Let's do Bitcoin. I'm never going to talk about Bitcoin. All right, I mentioned in one of the, I don't recall which one of the Twitter spaces I did where it's like a podcast where I'm talking to you live. I'll have one of them tomorrow, by the way. I don't know what time I'll do it, but it'll be before noon. But we have our fair value gap here, and somewhere in here I was doing a live Twitter space. I said we're going to trade up into that fair value gap. So we got that there. I think it might look like something like this did here. Like we had this drop, consolidate, then drop once more. Well, that's what I'm thinking. It might need to dig a little bit deeper once more into it, but I don't trade this, folks. Okay, I don't have any faith in crypto, and I've already said this before. I think they're all going to zero. And you don't like to hear me say that, but that's my belief, and I'm probably wrong. Okay, I'll concede if it rockets up and doesn't ever go to zero. But just be willing to accept the fact that if it does go to zero, I'll say, I told you so. But guess what? I'm not going to make any money on it. So I'm objective about it. I don't have any trust in it. I think these are going to go down just like anything else would go down. And the faith in this asset class, to me, is in question. There's a lot of fraud. There's a lot of things going wrong with it. And it needs a lot more regulation. So I think those that are involved in it are going to try to make a run with the bag, and they can go down quickly, like real quick. So again, I don't have any faith in it. I don't have any trust in it. I don't have any investment in it. I'm not short. I'm not trying to create fear and uncertainty. I'm not trying to talk it lower. I have absolutely no horse in the race. So you can't ask for anything better in terms of objectivity. I think that's the reason why the bigger moves, I've been accurate with picking this stuff, but I still won't trade it. I still won't do it. So that's my opinion. I think we're just consolidating. Might get a little bit of a bump once more, but ultimately I think we're going to go below that low. And let's take a stab at what we're likely to see. I think 14,000. You're probably asking, so why 14,000? Where'd you just pull that from? I'm going to keep it PG, folks. All right, so 14,250, we'll call that. Okay, so it's a standard deviation between this high and that low. Should this low take out? Well, not that low, but should that low be taken out, rather? We'll look for 14,250. And I really think 10,000 is likely. So this might be an objective, but I think it'll be aggressive and going through it. Should it trade, softer? I really like sub 8,000. So on a wild spike down that level down here. Okay. What changes it? We trade above these highs. As long as we're below these highs here, I'm thinking down here. And again, I have no horse in the race. I don't care if I'm right. I don't care if I'm wrong. There it is. I felt inspired to talk about it. So there it is. And I know you folks like XRP. ICT's talking crypto. Oh my gosh. Oh my gosh. Okay, look at this, folks. Seriously, I know you guys like to cheerlead this thing up. Like, it's going up, it's going up. I told you it's dead money. It's dead money. And this literally has done nothing. Like, I know if you treat it like a penny stock and you're buying it down here and it does all this stuff, oh, that's great. I don't look at that. Okay, if it's $1, there's a reason it's $1. It's dollar menu trading. I don't trade dollar menu trading. This ain't even $1. Like, it's below 50 cents. Like, I know it's like you want poor man's Bitcoin. But when these things are valued at these levels, there's a reason for that, folks. Just like penny stocks are valued at those levels. They're not big, noteworthy, good to invest in type of companies. Some of them grow out of that, but not most of them. So that's how I look at this stuff. I look at it as really, really high risk, aggressive forms of penny stocks, which to me is stupid. I don't think it's something that anyone should be doing. But I understand everybody wants to be a maverick and a cowboy, and they want to get out there and trailblaze and do something that no one's ever done before. My question is, where's XRP? 10x, 20x. Why is it below $1 again? If it's the future and all these things that always gets talked about, why isn't it performing? Why isn't it doing it? So that's, again, and I'm not trying to kick dirt in your face. I'm just saying these are the reasons why I won't ever touch this stuff. It's just simply not moving. Compare and contrast that with the index markets. S&P, Nasdaq. They're moving. They have value. Okay, can they crash? Sure. They're not going to zero. Not like cryptos can. I'm not interested in that kind of movement. That's gambling. And you're just trying to find a nice way to say this. You're dreaming. You're dreaming if you think these things are going to go $100,000. It's not happening. Okay, you're not going to see that here. It's a reason for it being where it is. So I remember when I first started, and this is a little bit of a rabbit trail, and then we'll close the video. But I remember getting into trading, and there was a time where I thought, you know what, I'm going to do penny stocks because I could buy a whole lot of it because I have a lot of money, and if it moves, $20, I could be really, really rich because I'll be so over leveraged. It'd be great. And then I started looking at them, and it quickly showed me that I wasn't cut for it. Like, I couldn't do it because they're just too nuts. There's no rhyme or reason as to why they're going to go up. Whereas you look at a market that's highly traded by professionals, algorithms are attached to them, like S&P and Forex. Those markets are better. I hate to break your bubble, and I know some of you are like avid fans of crypto and you really want me to come over to the dark side. I'm never going to do it. I'm sorry, I can't do it, because there are elements that are not in play in that asset class. Now, I said before, if they ever adopt that, then I might change my mind about it. And then I'll probably be the biggest crypto person on the planet then, because I'll be out here doing what you see me do in the S&P and the Forex market, and nobody would be able to keep up with me. Because I know there's a lot of people interested in this because they've watched things and storylines and the meteoric rise of Bitcoin and the meteoric decline. So there's a lot of attention, but that attention isn't the love that was in there in 2017. Now it's like, ugh, you burned me. You're like a date that I went on, had a relationship, started a relationship, and then fell in love, and then you cheated on me. Then you cheated on me again, and then again. It's hard to feel interested in that person. So I personify crypto in the same way. It's a cruel lover, much more cruel than futures, much more cruel than Forex, because this stuff can act up without any real reason. And it can stay fickle in consolidations longer than anything I've ever seen before, which is, in my opinion, not something that I would be want to trade. So if we're looking at short-term traders or day traders, we want momentum. We want things that are moving, that are one-sided. This doesn't, in my opinion, doesn't qualify for that. And it's too cheap. Cheap is not a reason for me to trade it. Cheap by the valuation of what it is. I mean, it's not even 50 cents, man. Like, that's why I'm not interested. Like, there has to be a real reason. If investors collectively in the retail universe, people on Reddit, Facebook, Twitter, if those individuals are wanting to trade these types of markets, I don't want to trade them. But if I see large banks and institutions that are trying to trade Forex currency pairs or index futures or commodities or stocks, those are real professional markets. These are highly speculative gambling asset classes. This is like casino time. Can you make a lot of money? I'm certain you can. Some people have. Am I certain I can do it? No. No. That's why I'm not trading it. You don't see AMP Live hooked up to crypto. You see it with futures. Okay, so that's all I'm doing with AMP. I'm trading just the S&P, just the Nasdaq futures. That's it. I'm not trying to do anything else. It's a one-trick pony account, broker. That's all I'm interested in, and I'm looking for things that make sense. And if it doesn't make sense, I'm not trading it. And crypto, to me, makes no sense for me to be trading it when I can see things much clearer. And I think this week I've demonstrated that in a definitive manner. Very precise. The narrative, the bias, the draw on liquidity, every aspect was laid in your lap. And I'm sorry if that comes across as arrogant. It's not meant to be arrogant. I'm just telling you, there are times when I know what these algorithms are going to do. And I challenge you to find anybody to be able to do what you watched me do this week. You're not going to find it. Larry Williams can't do that. Chris Laurie can't do that. All your Twitter heroes can't do that. And none of my students can do what I did this week. That's not a knock against them. But there's a lot of them out there that are trying to go out and blaze a trail saying, I'm going to teach you ICT, and I can do what ICT can do, or I can do it better. I can do 10 times what ICT does. Well, ask them to do what you watch me do. If they can do it, they'll do it gladly. And be consistent about it, and be precise about it. Don't be wishy-washy. Don't give me a line with, oh, here's what I did today in my trading account. Here's my MT4 statements. They're faked. I'm not interested in that. You can't fake calling a market with infinite detail consistently over and over and over again and then burn down the barn. You can't fake what I did this week, folks. You can't. It was before the fact. I gave it to you free in YouTube. I outlined exactly what it was going to do. It was going to use the opening gap opening on Sunday, trade down. I'm talking about S&P, by the way. And once it traded down into it, it rallied to the objectives I showed you. And you saw I executed on it. Hello. My private group knew that remaining balance on the daily chart was going to be the likely candidate for anything on the upside. And it was only off by 1/4 of a point. ICT can't pick weekly lows and weekly highs. He sure ain't trading it, right? Well, you watched me do it this week. I laid it in your lap. Now, can you do that every single week? No, you aren't going to be able to do that every single week. There are some weeks where I might have the idea in mind that it might do a certain thing, and I'm wrong and I have to adjust. And then I don't get the weekly high and the weekly low. I'll get a big piece in the middle. And I'm okay with that. And that's how I teach you. I teach you to think about trading like that. But when I feel like it's necessary to show everyone who's talking to them, then I do what I did this week. Because there's jokers out there that are claiming they can do 10 times what I can do. And that what I'm teaching is rubbish. And order blocks are retail. It's not retail. Okay. None of you even know what an order block even is. Okay. And these same jokers on Facebook and on Twitter, they're not showing you precision. They're not even showing you anything except for, oh, I took a trade and I did 90 trades getting 2 pips each. And I made 6% on my account today. If you're taking 90 trades and you're trying to get 2 pips and you're just getting 6%, you don't know how to trade. Your broker loves you. They're making more money than you are. But these are the people out there beating their chest. I'm here in my own lane, doing what I've been doing all year long, living up to everything I promised. Are you seeing the proof? Are you seeing reasons why you should learn what it is I'm giving away for free? Come on, folks. I mean, you're seeing it with a live account too. That's the unicorn. Nobody's seen ICT trade with a live account. I've done it. The question is, the other people that's out there that want you to not learn what it is I'm teaching you, they all have something to sell. Isn't that interesting? And they're also the same people that will not tell you in advance before whatever's going to happen in their system or their way of doing it. Why can't they explain to you? Tell me what is going to happen tomorrow. Tell me what it's going to do next week. How are you going to trade next week? Where do your setups form? Because mine, I tell you when they're going to form. You know what time they're going to form. Period. Was I wishy-washy about what I expected this week? No. I told you exactly what I was looking for. And that's the things that my private group has been watching for 6+ years. Do you feel scammed? Do you feel cheated? Do you feel like these things don't work? How many people have you seen that are now funded and they're crediting their time invested in what it is I've been teaching? Who else is getting that? Yeah, there's a lot of guys out there that are teaching my concepts with different names, like institutional candles, which don't exist. Order blocks have nothing to do with a candle. So let me just ruin that for everybody too. There's a lot of folks out there that just want the credit. And they have an issue with me demanding it be mine. And I don't care if it hurts your feelings. I don't care if you write books, because I'll leave reviews saying all of it's mine. And then they'll look and see that you are a fraud. You sell courses that are my stuff, renamed. People are going to call you out on it. And you can block and block and block. But apparently, people are going to still see the tweets, the Facebook posts, the YouTube videos. It gets around, folks. And you don't want to do that. You actually get more real clout by just being respectful and say, you know what? I appreciate what ICT did. I took it. I made it my own. And this is how I'm carving out my own path. Is there anything wrong with that? Nope. Nope, not at all. That's what a real man would do. Someone with character, not starved for clout. This new series ends. What is that all about? In the States, we have an expression where we're trying to make ends meet. What's that mean? Well, you have only so much money coming in for income, and you have so much money expected to go out in bills or expenses. They're called ends. And how do you make those ends meet? Your income and your bills. Sometimes they don't meet. Sometimes they have to roll over into the next month, and they continuously get paid late. There was a time when I was a young man, that's how it was. Sometimes delivering pizza, I didn't get what I was expecting, and I overspent because I was irresponsible. So everybody out here that has courses, that have influencer approaches to trading and trying to get you to join multi-level marketing garbage, or doing marketing for some educator to do their stuff, use their service, their product, their course material. They're all trying to sell and trying to make commissions, and they're trying to influence you. It's a real easy thing to get people to follow you in this industry. It's so easy. Know how to trade, and then demonstrate that you know how to trade. Because if you do that and you're consistent and you're honest about everything you're doing, and I do that, folks, I left millions and millions and millions and millions of dollars of real money getting paid to me to teach what you're learning for free. Who does that? Because these yahoos aren't going to do it. They're selling hard because they're not already rich. They'll give you that. We want 7 streams of income. No, you need to eat, because PB&J ain't enough for you. Dollar Menu at McDonald's ain't enough for you. So you're selling because you need to. I stopped by my choice. What source of information are you going to trust? The guy that's sitting here talking to you, that's laying down his ability to fleece the retail community that would gladly throw money at me. And I'm saying, you don't need to. Just work on the things I'm showing you for free. The guy that's proving it to you with precision that is unrivaled. It doesn't exist anywhere else, folks. Because if it did, it would show up. And it ain't showing up. I've invited them. They won't show up. That's not arrogance. I'm open for discussion. Show me what it is I'm doing that's fake. Show me what I'm doing that is wrong. Show me that this isn't how markets work, or how markets are made, or how markets are booked. Because I'm proving this is how it is. And nobody else is showing you this. Nobody else. I'd be lying if I said I wasn't having fun, but that's not why I'm here. I'm not here to flex and do all these egomaniac spurts. I had one this week. I'm human. I see these goobers and the things they say in other mediums. Just come on over there to Twitter. Show me what you can do better. Show me how I'm doing it wrong. Show me how I'm faking it when I'm calling it before it happens. See, these are all the things that people have learned by other people parroting liars because they don't want to believe it's real. But how do you deal with what you saw this week and for the entire year so far? How do you reconcile that? If it's not the truth, what is it? And how can it be faked? I'm not time traveling. And these are the things that you're going to have to contend with. And some of you are so eager to get out here and do these things in front of everybody. And you're going to be met with the same stuff. They're not going to believe you. They're not going to care. They're going to be jealous. You're not going to get the reaction that you're looking for. You're not. So don't let that be your motivation. What should your motivation be? Learning how to do this so that way you can make ends meet. Not make your lease payment for your Lamborghini. Yeah, I said that. Most of you that are listening to me, like everybody else on YouTube, probably have a hard time making your bills every month. Or if you make them, you got very little money at the end. Your ends don't meet. So I'm going to sit down with you tomorrow, sometime before noon, and I'm going to have a little bit of a woodshed moment where I talk to you, and I have my sons in mind when I'm talking. So that way you understand who my audience is, but it's going to feel like I'm talking to you because it's going to resonate with you and the things you're probably thinking about or thought about. And I'm hopefully going to align your expectations with reality. If you do that, if I'm successful in that, then you'll have the best chance of using this new series to your benefit. It's meant to go after your most expensive bill. That's how you should start. That should be your goal. Now, you don't start there, but that should be your first goal, is to meet every single month that highest expense each month. And once I go through the mindset part of it tomorrow, which won't be on YouTube because it'll be boring. Like this part here, it's boring. Most of you young guys have probably already turned the video off. That's fine. But you won't get the results you're looking for because you're lazy. You're not putting in that work. You're not listening to the things that matter most because you think you know how to do it because you watched a couple of videos. You think there's other people that are teaching this better because they show you hindsight. Let them show you what I showed you this week and all this entire year. Crickets, if you get that at all. And I know, because I'm doing this kind of style, even the people that were quietly supporting me because they're selling my course, they're selling my material, and they're trying to make money off of that by repping me quietly in their accounts. Oh yeah, I see this. He's that. He's the bee's knees, man. He's daddy. They want that fever because then they can sell videos that you don't need. It's all right here. I'm teaching you exactly how to do it right here on the mentorship on YouTube for free. All you gotta do is show up. But those same people are getting sour to me now because I'm taking their money away. That's why I'm here. That's why I'm on Twitter. That's why I'm teaching, because thieves don't deserve what they're getting and how they're getting it. A lot of people are not making their course sales that they were because of what I'm doing. Do I feel bad about it? No. Nope. This spinning rock has a whole lot of suckers on it. They're going to be the worst sucker if they buy anything for trading and not at least give everything I'm teaching and giving away for free a test drive. You got people out there saying I'm complicating things. This is not complicated, folks. It's easy. It's real easy. What's complicated is about following the rules. If you're not going to follow the rules, if you're not going to be disciplined, anything you get involved in, it's going to be complicated because you are wrestling with the lack of discipline. Most young men are going to have that problem. I had it. I have no shame in telling you I had it, and I wrestled with it. I have an issue with authority. I don't like being told what I can do and what I can't do. I've been told not to teach, and I still find ways to do it. Not without repercussions that we won't go into here. But the bottom line is, if I'm told not to do something, I'm looking for 12 different ways where I can. But you, as a student learning how to do this, you have to be disciplined. You have to follow the rules because you have no framework otherwise. Now, those rules may evolve into something entirely different later on once you have more experience. But in the beginning, without experience, you have to learn from somebody that can do it. And I think I'm demonstrating I can do it. And I can probably do it better than anybody else you're ever going to meet. And if they can do it as well as I do, chances are they're not going to do it for free. So again, I question, who are you going to listen to? If you were in a courtroom and you're in a jury, who are you going to determine has the better evidence? ICT or anyone else? I'll leave you with that. Until next time, be safe.